Hey everyone. Today, our group will present about audit-related services and non-assurance services. First of all, let we explain about special purpose audit. Special purpose audit refer to those circumstances in which the auditor is required to report on specific financial information for specific purposes to specific users, in comparison with the general audit of financial statements. Special purpose audit engagements, according to the International Standard on Auditing, include audits of a complete set of financial statements prepared in accordance with another comprehensive basis of accounting, a component of a complete set of general purpose or special purpose financial statements, such as a single financial statements, specified accounts, elements of accounts, or items in a financial statement, compliance with contractual agreements, and summarized financial statements. Next, due diligence. In audit other service, due diligence audit is a process of inquiry and investigation made on behalf of a prospective buyer on a possible business merger or acquisition. The scope of due diligence requires the chartered accountants to verify the state of affairs of the targeted business. It requires comprehensive review and inquiry. It is conducted in prudence and in accordance with the generally accepted practices. The auditor is required to understand the client's need to avoid wrong audit procedures being carried out. Therefore, letter of engagement is necessary for the audit client to agree on the scope of audit. Audit procedure of due diligence are: review the working papers of previous auditors, review income statement to determine accuracy of profits, verify all the material items in the balance sheet, and review and report the management structure and corporate structure. Now, we move to forensic auditing and audit other services. Definition: an inquiry into the financial affairs of a business, including the examination of its audited accounts for recent years and its current and estimated future position, as it will enable the investigating accountant to ascertain and marshal in his report the information relevant to the purpose of his inquiries, and to give recommendations and conclusions based on this information. Forensic auditing objectives are often conducted to obtain or develop information as legal evidence or for use by expert witnesses in the court of law, requires the use of critical analyses and investigative skills, integrated with accounting knowledge and business experience, required to report to the company that has appointed him or her in the case of a regulatory body, for example, Bursa Malaysia or Ministry, to the committee set up for that purpose, and required personnel who are trained in detecting, investigating and deterring fraud and white-collar crime. Stage of forensic auditing. First stage, instruction from client, written and establish the aim and scope of assignment. Who is the beneficiary of the report? Confidentiality issues, schedule of investigations and reasons for any limitations imposed. If no or incomplete instructions, the accountant should send a letter of engagement to the client confirming any oral instructions or terms of reference given by the client. Second stage, communicate with the auditors. If investigating accountant is not the auditor, he should make arrangements to ensure that the auditors are informed of the impending investigation and to communicate with the auditors as a matter of professional courtesy. This is because the investigating accountant will require information from the auditors when conducting the investigation. Third stage, assessing the aims and probable scope of the investigations. Assess whether you can achieve the aim and assess whether the scope of investigation can be covered. Fourth stage, obtaining background information. Preliminary visits to be made to gain an overall appreciation of the situation. Fifth stage, deciding the outline of the audit report. Important to draft the main and subheading of the report, as this will help him guide the direction of the investigation, facilitates the control of the staff, and provides a framework for the final reporting writing. Sixth stage, fact gathering. Facts that gathered during the visit are to be compared and analyzed. Prepare a detailed listing of important and critical points. Seventh stage, drafting the audit report. The work should be completed in parts. Once work completed, should write report. Last stage, clearing the draft report with the company being investigated. all factual parts of the draft report to be cleared with the company to be investigated. Help to eliminate any minor inaccuracies, and often leads to further points of importance, and hence avoiding any disputes at a later stage. Now, I will explain about assurance level for audit-related services. Assurance services provided by chartered account firm is attestation services. Attestation services is when chartered account issues a report about the reliability of an assertion that is made by another party. Attestation services fall into 4 categories. 4 categories of attestation services are: 1. Audit of historical financial statements. 2. Effectiveness of internal control over financial reporting. 3. Review of historical financial information. 4. Other attestation services that may apply to a broad range of subject matter. The first category is audit of historical financial statements. What is audit of historical financial statements? Audit of historical financial statements is a form of attestation service in which auditor issues a written report expressing an opinion whether the financial statements are fairly statement according with FRS. Next, effectiveness of internal control. The auditor must attest the effectiveness of internal control. This is because effectiveness internal control can reduce likelihood of future misstatement in a financial statement. The third category is review of historical financial information. Review of historical financial information provides moderate level of assurance on the financial statement, less evidence to accumulate necessary to support the opinion. Last category is other attestation services that may be applied to a broad range of subject matter. Basically, natural extension of the audit of historical financial information, as users seek independent assurance about other types of information. In this topic, we will cover other assurance services, while next topic will cover non-assurance services. Under the assurance services, we will discuss about the assurance engagements other than audits and review of historical financial information, which are: 1. Review of financial information. 2. Agreed upon procedures. 3. Compilation. 4. The examination of prospective financial information. Next, let's proceed with the non-assurance services. This includes consultation, which the management will consult the clients by either verbally or writing. The consultation for the clients covers the stock public offering, company acquisition, venturing into new business, new product development, study the business new location, internal control development procedures, improving the business operation, reducing the cost, and improving the process flow. Next in the non-assurance services is secretarial services. Secretarial services are provided to the clients. The secretarial services take part in new companies incorporation, companies deregistration, companies winding up, the statutory books and registers maintenance. Other than that, it also take part in filing statutory forms and return to CCM and other regulatory authorities, attending meeting and preparation of minutes. And lastly is giving advice to the client regarding the matter related to secretarial. Now, it is about taxation service, which is also one of the non-assurance services. Taxation services provide a compilation of return on behalf of the client, which includes CP 204, Form C and tax computation. Form R, which is the information about Section 108 tax balance, Form E and EA, which are for the employer and employee. It also conducts the tax planning and advise the clients on new rate changes and new incentives. Now, ladies and gentlemen, what is an agreed upon procedures engagement? Let us start with the objective of an agreed upon procedures engagement. It is for the use of auditors in resulting procedures of an audit nature. This is where the auditor, the entity and any appropriate related parties have agreed and to report only the factual finding and no assurance is expressed. General principles of an agreed-upon procedures engagement. The accountants must act in compliance with the Code of Ethics for Professional Accountants issued by IFAC. So, what about the terms of the engagement? The auditor must make sure both the auditors and clients understand the agreed-upon procedures and also the engagement's conditions. Regarding the documentation of this engagement, the auditor must document matters which will be useful to act as evidence and as a supporting document for the report of factual finding. Other than that, the procedures and evidence include inquiry and analysis, recomputation, comparison and other clerical accuracy, observation, inspection and obtaining confirmation, and depends on what has been agreed with clients. Lastly, regarding the report on an agreed-upon procedures engagement, it needs to explain on the purpose and the procedures in sufficient detail to help the user to understand the nature and the extent of the work performed. Next, based on ISRS 4400, Chartered accountant is engaged by a client to issue a report of actual findings based on specific procedures performed on financial or other information. There is no assurances express. Agreed-upon procedures is an engagement that may involve the auditor in performing certain procedures concerning individual items of financial data, financial statement, or even a complete set of financial statements. Next, based on ISRE 2400. In review engagement, the auditor provides a moderate level of assurance that the information subject to review is free of material misstatement. Review comprises inquiry and analytical procedures which are designed to review reliability of an assertion, which is the responsibility of one party for use by another party. Review of financial statement will involve the application of audit skills and technique in the gathering evidence. But it does not involve an assessment of accounting and internal control systems, tests of records and other procedures in auditing such as to obtain third-party confirmation and physical observation. Objective of a review engagement is to enable the chartered accountant to state whether, in all material respects, the financial statements are prepared in accordance with an identified financial reporting framework. Terms of the engagement is, the auditor should ensure that there is a clear understanding between the client and the auditor regarding the engagement. General principle of a review engagement are, the accountant should comply with the Code of Ethics for Professional Accountants. Auditors should plan and perform their review with an attitude of professional skepticism that may exist of circumstances which cause the financial statement to be materially misstated. For the purpose of expressing negative assurance in the review report, the auditor should obtain sufficient evidence through inquiry and analytical to be able to. Procedure to review financial statements are: 1. Obtain an understanding of the entity's business and the industry in which the entity operates. 2. Inquires entity's personnel responsible for the financial reporting about all the material statements and whether all the transactions have been recorded, whether any changes in accounting policies in practice. 3. Inquire about the actions taken at meetings of the board, shareholders and other relevant board committees. 4. Perform analytical procedures to identify relationships and individual items that appear to be unusual. 5. Read financial statements to determine if they conform to the identified financial reporting framework. 6. For every financial position items, perform certain level of audit technique, but not to the extent to get confirmation from third party or physical observation. 7. If appropriate, obtain written representations from management pertaining to all matter including subsequent event. Reporting of review engagement. Review engagements provide a moderate level of assurance that the information subject to review is free of material misstatement. This is expressed in the form of negative assurance. Next, the assurance engagements other than audits and review of historical financial information is compilation. It consists of the objective, general principle of a compilation engagement in terms of the engagement. Objective is for accountant to use accounting expertise, as opposed to auditing expertise, to collect, classify, and summarize financial information, produce a report, and no assurance is expressed. General principle for compilation engagement is accountant must comply code of ethics for professional accountant. And the terms of the engagement is accountant should ensure that there is clear understanding between the client and accountant. The following are procedures for compilation of financial information. 1. Obtain general knowledge of the business and operations of the entity. 2. Obtain knowledge about the accounting policies and practices of the industry in which the entity operates. 3. A general understanding of the nature of the entity's business transactions, the form of its accounting records, and the qualifications of its accounting personnel. 4. Accounting basis on which the financial statements are to be presented, and the form and content of the financial statements. 5. The accountant should obtain an acknowledgement from management of its responsibility for the appropriate presentation of the financial information. ISA 3400 The examination of prospective financial information. Prospective financial information means financial information based on assumptions about events that may occur in the future events and possible actions of the entity. It is highly subjective and can be in the form of forecast, a projection, or a combination of both. For example, 1-year forecast, 5-year projection. Financial forecast means prospective financial information prepared to the best and responsible parties' knowledge and belief, and entity expected financial information, result of operation in the cash flow. It is based on assumptions as to the future events which management expects to take place. For example, forecast next sales will be Rm 1 million, and to achieve the forecast, the company will launch a new product.